So dividend stocks, we are back. It's been a while. I know this is mainly crypto led, but I also want to do dividend stocks. Basically, this channel will become a financial channel at some point in the future. However, we're going to do a big change, and this may well tickle you and get your interest. We're going to put my YouTube earnings, my Twitter earnings, etc. into this portfolio every single month. Compounding effect, we're going to talk about it. It may well actually get some people to create content. It might well make you do more stuff on the side in the internet world to try and make more money for an investment. We will go through the portfolio soon, but let me explain how this is work and the compounding effect. Obviously, you can see here my YouTube channel, lovely. Now, predominantly, it's cryptocurrency led. And as I say, over time, it will probably become a wider financial channel, just as it seems to be. Now, as you can imagine, £293 per month, not much, but when you add Twitter onto that and obviously the growth of the channel over time, potential bull market here, it may well be interesting. But what I want to do, and I hope I've still got you here, is show transparency of growing a portfolio to show you the compounding effect of being able to invest in a portfolio every single month and see it grow, whether that is in crypto, whether that is in index funds, whether that is in other markets, right? It doesn't really matter, but we're going to focus on dividends. I'm going to explain my blueprint, how it'll work, and this is the video for it, right? Again, we talk about Twitter earnings, not quite got there yet, almost, but this will change, this will get better over time. Obviously, 7% of the revenue, okay, I know, but we'll see how it goes. We will see. But the compounding effect, now this works with content creation, it works with getting views, it works with getting subscribers, growing your portfolio, right? Now, as you can see the chart showing the compounding effect. When you scroll down, you start to show the longer term game here. If you are putting in, say, £500, $500, 500 euros into something every single month with consistency, your money will add up. When you add a value appreciation to that, when you add dividends to that, when you get annual sort of interest as well, it's going to add up when you reinvest that. It's like me doing a YouTube video. I get, say, 2,000 views. The next video I do, I get more or less. More videos you do, the more views you're going to get, the more you're going to get subscribers, the more money you're going to make, right? It's the exact same in investing. Kind of makes sense. Some people might get it, some people won't, right? When we go to compounding, right, where money starts getting reinvested automatically, this is where it gets interesting. So what we're going to do, we're going to automatically reinvest any dividend. Over time, we're going to get more and more stocks. More stocks will equal more unit price of a dividend share every single time, which is great. Even if the stock plummets a little bit, right, you are still going to get paid your dividend per the earnings call, etc., etc., etc. Now, as you can see here, the initial investment, you can see the change. The compounding element over 30 years, you can see the change. You can see in 20 years, the change. It's huge off the same initial investment. But we are going to continue doing this unless my YouTube channel makes about 30 grand a month. I don't really want to be putting 30 grand into the stock market because it's kind of obvious, really, tax. But you get the idea. We will grow it as much as we can in the shortest amount of time. Let's talk about what is actually happening in terms of my portfolio, right? This week, it's earnings week, right? Sure we are aware of that. If you go to the following week, we've got a bit of Visa as well, and then following on, there'll be other ones too. But let's talk about the portfolio itself, right? With regards to this, there is an element of crypto. So if you're still into crypto, you probably will know this. Miners. Cryptocurrency miners are in my portfolio. So is Coinbase, right? So I have two portfolios. They're all recorded on here. I know there's not a lot here, but come back in a year, we may well have a lot more money in here because we're going to put money into it. Obviously, I've just said that. But the element of growth in my portfolio is going to be Coinbase and Riot. Riot Blockchain Incorporation, which is mining. Coinbase, kind of obvious, right? Those are separate. Everything else is dividends, right? Let me explain. So the dividend blueprint, we are going to be going for very obvious dividend stocks that have high growth. Why high growth? I want a stable stock that is solid, that doesn't move much, but is growing a dividend every year. Over 5 years, you can see here, pretty interesting, right? So over the last annual growth of Tesco, Greggs, Rio, London Stock Exchange, etc., right? They're all growing, which is a huge point here. When we look at the fact of the dividend stocks here, bear with me, in my portfolio, my dividend calculator, how this will work is every single time you get a dividend payout from an individual stock, it will grow, right? So for example, 69 cents is what I got paid for Greggs, so it's a small holding. In the next year, if that grows by 10%, it may well be another 7 pence added to it, unless you've not bought any more of that stock. You've obviously bought more of the stocks and grow up. So every single time, your dividends are going to grow anyways, which was indication of what Warren Buffett did for a long, long time with a lot of his stocks, like Coca-Cola, for example, right? So it kind of makes more sense doing it that way. I personally like this. And when you go to another year, you can see that the growth has actually increased because it's of the net growth of what, on average, your stocks are growing, which is hugely important, right? So when we talk about this is what I mean, the 5-year growth. So you can see over a 5-year period, on average, that is what they're growing. That would indicate you are going to get more money every single year because the company is growing their dividend. It's dividend growth investing. You're picking stable, solid stocks that have been around for a while that will not lose growth, technically. Sometimes they will, sometimes more often than not, they don't, right? Hopefully that kind of makes some sense in terms of the blueprint. So just to repeat, solid stocks, not high yield, not crazy, unrealistic yields, but a growing dividend stock. That makes sense? Good. Moving on. The big thing we've got to worry about is obviously stuff what's happening now, right? The earnings. As you can see, United Health is one of my earnings. It actually did pretty well, considering, which is good. It rose in price and it beat, well, its revenue grew by 14.2%, which 19, where did I get that from? Over the estimate. So that's pretty good. The big fundamental element to earnings is obviously, do they miss, do they hit, or have they overreached and gone a bit too crazy? Sometimes if it goes a bit too far one way or the other way, you could probably argue that the forecasts were a bit wrong. And sometimes it leads to a bit of volatility because of the excitement of it, for obvious reasons. If it's like, oh wow, amazing earnings, spike, people want to buy it for some reason. Obviously, if you miss, the other way around. Yeah. Again, same for Rio Tinto here. Another one of my earnings. Their production massively up. It's just pretty much all plus, apart from the bottom one here, for obvious reasons, and this down here. But most of them pretty much in the pluses in terms of what their mining minerals are. It's pretty good, right? That's pretty good going considering what is happening in the world right now. So yeah, when we talk about this, when we talk about how much money can we make from the stock market, what do we buy? And this is why I've got quite a balanced, simple portfolio with not much in there, don't get me wrong, but this is the starting point. We are going to start this now with the creator fund, essentially. This is why I call it creator earnings. So we'll see where we are in a couple of years. It will be a journey. If you are here to follow on, feel free to. If you like what's on the screen, Snowball Analytics, there's a nice little discount code in the bio. You save 10% if you use the word mobster is the promo code. It's a good bit of kit. I like it a lot. So yeah, we are back with the dividends. Yes, I know it's not mental craziness, but you can see over time we may well do well if we have some consistency. For obvious reasons, if you don't know this, I've been moving house. It's been pretty crazy in my life. I've not been able to do anything. Now I will be. Anyways, if you like this video, leave a like. If you like dividends and you want more of this content, please do subscribe and you will see them. These videos will happen every fortnight or so. And yeah, enjoy.